Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Ankit Sharma, and we have now put the first week of 2024 in the books. And for me, I made one whopping trade for that week. So let's jump into it. In this video, we are going to go through the previous week. We're going to look at some of the news. We're going to take a look at the broad market trends, and then we're going to look at where the market is now. We have a saying at Maverick, trade the market in front of you, not the market you want it to be, the one you think it should be. We always look at what is the market in front of us, and we score everything from +3 to -3 based on technicals, and then we take the strongest currencies and pair them up against the weakest, and those are the trades we look for.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We had the market pull back pretty much almost every day this week except for Friday. We talked last week about the Santa Claus rally. The Santa Claus rally is the last couple days of the old year and the first couple days in the new year. This has been positive 2 out of 3 times. So 2 out of 3 times it's been positive, and the average return over those 7 days has been 1.3% positive. Santa Claus rally did not come this year. It was actually a negative 0.9%. So this was one of those 1 out of 3 years that didn't follow the seasonality pattern. I want to just take a little bit of time to talk about these seasonality patterns because there are seasonality patterns that happen in January, and we'll discuss those. But again, seasonality pattern means that some of the time this happens more than other times. But remember, this is like statistics. If you are good at shooting a basketball and you make a basket 6 out of 10 times, that's a pretty good shooting percentage. Should you be mad if you miss one? No, you understand that's going to happen. That's the world of statistics. So when we get into these seasonality patterns, we talk in statistics. One of the seasonality patterns we talked about last year was that September 1st through October 15th is seasonally the weakest part of the year. And so in every August, we start to get defensive. We say, hey, if it's bullish, let's not get bullish anymore because of this. This year, sure enough, it was the weakest part of the year. So this year, that seasonality pattern worked really well. And then we talked about how the week of Thanksgiving is typically an up week. It was an up week. We talked about how December is typically an up month in equities. It was an up month in equities. Then we get to the Santa Claus rally, and it was one of those years that it just didn't happen. Whenever we talk about seasonality patterns, we have to understand it's just a world of statistics. So let's get into what happened this week. We had equities, they pulled back, and they pulled back pretty hard. We had the S&P and the NASDAQ both pierce their 20-day moving average. That's the first time it's done that since November. However, the economic data remained fairly strong, and we're going to take a look at the calendar here in a second. But what we really saw last week that caused the equities to fall is we got a bounce in both the dollar and the yields in bonds. As long as those go higher, this equity market is going to struggle. And that's exactly what happened this week. Cryptos were volatile. They had a down week. But again, this is after a very, very strong run. The markets this week, the equity markets, had its first down week after 9 weeks of up weeks. Of course, you would expect that to happen. The big question is the equity market run over? We'll take a look at that. We'll take a look at it on a chart. And again, we'll make that decision here. Let's take a look at the U.S. data. We had ISM, slightly better than expected. But inside this report, the prices paid plummeted. So that was a very good inflation reading out of the manufacturing. Job openings softened a little bit. Then on Thursday, we got U.S. data that was a little bit stronger than expected. And then on Friday, we also got employment data that was stronger than expected. Now, I talked about the expectations of the 168,000, which was the expectation, as being Goldilocks. Goldilocks means not too hot, not too cold. This number that came out was a little hot. It was a little hot. And the markets didn't like it at first. We saw the dollar spike and we saw the equities go down. But then what I think people did is they looked at these numbers and said, we've been worrying about softening economic activity. This is proving to us that the economic activity is going to be stronger, at least employment. And then at 10 a.m., we got this number. This is a bad number, everybody. And this is the weird thing. Well, it's not weird. We understand it. This was a bad number. This is showing 2/3 of the economy in the U.S. is services related. This number is now down to 50.6. 50 is recessionary. Growth and no growth. Above 50 is growing. Below 50 is shrinking. The market loved this number because after this hot inflation data, this hot employment data, they got another number that softened it a little bit, pretty much confirming that the Fed is not going to raise rates. So let's take a look at what actually happened for the week. And let's take a look at the numbers here. Again, we did have a down market in equities. As you can see here, equities were down almost 2%. Crypto got hit pretty hard. But remember, crypto's had a massive run. If something goes up 40% and then it pulls back 5%, it's not a surprise. No one was surprised. Gold suffered from the strong US dollar. We'll take a look at the dollar chart here in a little bit. And oil had a big bounce, but again, this is from very depressed levels. So same thing as, Bitcoin goes up 40%, it pulls back 5%. So same thing as oil falls 40% and then bounces up 3%. Not that big of a deal whatsoever. Let's go in and take a look at the S&P chart. Here you can see we have had just this pullback. And we talked about certain levels on the S&P. And you can see that we pierced below this high base level. 2 days we've tried to bounce. We have tried to bounce on these 2 days and just couldn't. It's telling me that there's probably more to go. We needed to see some bullish price action in this area. And you can see it just doesn't look like it wants to bounce here. The next level of support really isn't down here till 4,600. So that's another 2%. I think we could have up to 2% down. Probably this 50 moving average will be pretty close to it at that point. That's going to be a major test. The market doesn't have to do anything I say it should. It's going to do its own thing regardless of what I think is going to happen. But I'm just pointing out points on the chart where we see them. We could fall down into this area of kind of no man's land between these support levels, and we could bounce. We could bounce in here, and that would be perfectly fine. The big question is there anything in this chart that right here tells you that it's a bear market? The answer is no. Ankit, what are you looking at equities right now?
Hey, Rob, I'm on the same boat as you. Market had a remarkable run for November and December. So as we take a look at the first week, of course, we see a change. And this is what this week was. It was a change in a lot of currencies where the strongest were the weaker and the weaker were the stronger. So none of these movements that we talk about are one way forever. So that's exactly what's happening is we are seeing pullbacks. So we are still in the grand scheme of things. We are still looking strong, but in the shorter side of the things, we are in a correction phase. We are seeing bear rallies. Dollar, a good example. It was -3 for 2 months, and now it's actually the score has improved. So what we are seeing is the movements are in retracements. So those retracements are healthy. I think those retracements are healthy to get long again, especially if we see the resumption of that trend. So I think short term we're in a pullback, but long term we still don't have a lot to change as far as the outlook goes, unless we get something out of the data that would suggest differently. So that's really where I'm at.
You're exactly right. We did get a lot of movement. But the question is, did anything change? Did anything change technically, on the charts? And that's what we're going to look at. I mean, that's the whole point of us meeting every week in this session and breaking everything down to see, okay, did things change? My favorite trade last week, going into the week, was long yen. All right, look at that one. Pretty proud moment here. Here's the great thing. I never actually got long yen because it never triggered. The yen was weak all week long and it never gave me any reason to be long yen. So on this one, again, this long yen, It's nice when you have a call and you never lose any money from it because you follow triggers, you follow technicals. Hey, it never broke out of high bases. It never did anything that we like to see. We talked about the dollar and we said, look, the dollar's still weak, but it's fallen too much. And we said, hey, we don't like the dollar short. We don't like the dollar short. We'd prefer something like euro short. Again, the euro ended up being fairly resilient last week, and the euro was actually up. So all the calls I had last week were definitely not correct because I was expecting there to be bear rallies, and they just didn't happen. Just didn't happen. The pound was one of the better currencies. We had this listed as, I think -1 or something like that. But here's the one call we did make correct, Ankit, was Aussie and Kiwi. We don't trust it. We just don't trust Aussie, Kiwi either direction. And we're going to take a look at the charts, and I don't really think you can trust them going forward. They're just not acting like a tradable currency at the moment. When we take a look at the crypto market, you can see the less quality coins, and again, that is Bitcoin Cash and Litecoin, they got crushed. But quality held in. You can see Bitcoin was actually up for the week, Ethereum only down 2%. We have continued to like the quality coins, Bitcoin and Ethereum, more than everything else. All right, let's take a look at scores. We need to score everything in the market. We just looked at the S&P. And the S&P, our rule is if it's below the 20-day moving average, it's a -1. Guess what? We are below the 20-day moving average. If it is above the 50-day moving average, it's a +1. Okay, we got that. And if the slopes are both moving higher, that's a +1. That should be green. Sorry, everyone. So that's where we got to a +1. We have +1, +1, -1. We're at a +1. So that is mildly bullish. We are mildly bullish in equities, and that's not our opinion. That is literally technical analysis opinion. So we have been at +3 for weeks and weeks and weeks. It's telling you, hey, this is possibly softening, and it possibly could be the end of the trend. We won't know yet until a 50-day moving average breaks, but it's just telling you to be a whole lot less bullish at the moment. Here's the reason. Here is the bond yields in the US. And you can see these bond yields did not stop at a moving average. They're heading up here to this resistance level. We had this little spike here to that resistance level, but you can see it wants to try it again. It definitely is looking to break out. This is more of a bullish pattern than a bearish pattern, which is why the equity market is on its back foot. If these equities go higher, the stock market will absolutely go lower. Taking a look at cryptos here. Again, this is the basket. We'll take a look at them individually. Bitcoin still looks like a great buy. Everything else doesn't look great. Here we have just this big base forming. It failed to break out several times over the last 2 weeks. And here we are at the bottom end of the range. Do I want to be a buyer here at the bottom end of the range on Bitcoin? Probably not. On all the cryptos. Like I said, Bitcoin still looks possible, but everything else looks pretty terrible. We don't really love the cryptos here. And we did love them in November, December. They were an early winner in November before the rest of the equity markets picked up, but it's not showing good signals here now. We do have some big inflation data next week. You can see we've got inflation data out of Switzerland. We also have inflation data out of Australia on Tuesday. And then we got probably the biggest one. We've got US CPI on Thursday. So you can see this is all about inflation numbers this week. And really, the Swiss franc one, I think there's not going to be a whole lot of movement. I think this Aussie CPI number is actually a decent trading opportunity. I think if this comes out a little bit hot, then I think the RBA might actually get a little bit more hawkish. But we're really concerned about the US CPI. If you take a look at all the numbers, all the employment numbers have been getting bigger, manufacturing numbers have been getting worse, and inflation numbers have been coming down. Again, this is kind of Goldilocks for the Fed. This is exactly what they want. They don't want to kill employment, but they want to kill inflation. And for the most part, it looks like the data says they've done that pretty well. The big risk is if inflation picks back up, the Fed's going to have to get bearish again, and then the market won't like that. Anka, what do you think is most likely going to be the case for the Fed? I know that some people are expecting the Fed to cut in March. What do you think about that?
I think it's really an aggressive call. And that's one of the things that we started to notice this week was that, we've seen the yields fall to the lows like all November and then December. So what we are seeing is a little bit of a liftoff in that. So I think it's a bit of an aggressive call, personally speaking. We need to see the economic data get weaker for these yields to continue going lower. And we're still seeing the economic data still okay. So I think that's an aggressive call where we could see a rebalancing. We have seen this sort of play out over and over in the last year or two, where the expectation gets too far from one side and then it doesn't meet the expectation and it has to revert back. I think that's really where we are at. I think that's a bit of an aggressive call, and that's why I think we have to look that in, factor that into our analysis. As we look at the dollar or any of the currencies right now, the big focus is these rate cuts that everyone is so excited about. But again, if that doesn't come out, or if the inflation number is not falling as much, or the Fed comes out and talk it down, I think that will be a challenge for that narrative to continue going forward. So this is why I think the first January and February could be an interesting month where we could see some rebalancing going forward.
Anka, you make a great point and a very insightful one. Over the past year or two, it's always been the fear of the Fed's going to get more aggressive. And that's been like holding things back a little bit, that fear. And then again, the expectations get too far. Oh, the Fed is going to cut, the Fed is going to raise. And then they don't, and everyone gets more excited again. You're exactly right. We've now been flipped over, and we're now doing the exact same thing on the other side. Well, people are like, oh, no, getting so excited for possible rate cuts. I think you're right. I think the Fed is just on neutral. I think there's no question at all the Fed is done raising rates. But I think the debate now is the Fed going to cut rates? And you're right. When expectations get too far, it's going to cause a little snapback. That's a very, very insightful point. All right, let's take a look at all the currencies one by one, score them out. I'm going to go through cryptos. Anka's going to go through Forex. Let's take a look at Bitcoin. All right, now I want you to just take a look at the daily charts on all these cryptos and just see how different they are. Here on Bitcoin, we've got this rising ascending triangle. This is a really good pattern. We did try to break out right here. And yes, it did not break out. It failed. But look, it didn't break down. It just sunk back down into its base. A lot of times in bases, you get these little false breakouts and they fail. This is why we really, really like taking like half positions. Hey, take a half position on a breakout. That way, when it pulls back and sits back into its base, you can handle those. You can sit through those and you can wait, because it does look like this wants to break higher. However, we're at plus ones. It's not quite there yet. We go over, take a look at Bitcoin Cash. Look at this chart. I have no desire. Look, this currency, I've traded this currency a handful of times. This is what this currency does. It goes nowhere, and then out of nowhere for one day it spikes up. And then it goes nowhere, and then out of one day it spikes down, and it goes nowhere. I mean, this thing, I just have no desire to play anything like this, because unless you're there for these one-day pops, you're sitting through stagnation. To me, it's just not a good trading vehicle. Ethereum is decent. It's not as good as Bitcoin because this is a true base. This isn't a rising base or an ascending triangle. This is a true base. And you can see Bitcoin was kind of closer to the high of its end than Ethereum is. Ethereum's near the bottom of its range here. Again, just not excited. It's a 0 and a -2. Again, I need better numbers than that to get excited about going long. And then here we have Litecoin that's just flat out bearish. Like all the other cryptos are like, hey, we're in a pretty good spot. Litecoin's like, I'm never going to break out of its high. It didn't even base. It just got lower and then just had that nasty day. To me, if you can sell short, if you want to sell short a crypto, Litecoin is the one to go. But to me, I am just not interested in any cryptos here until we get some better numbers. Take us through Forex.
Absolutely. Let's just start with the US dollar. And one of the themes that we'll notice this week is that there has been change in trend scores. Now, like taking a look at the USD, you can see that since November, it's been -3, below the 20, below the 50, and moving lower. So as we go into this week, I mean, this week was a transition week, because we haven't used to trading a certain way because it's been going one way. Now you can see that the score has improved. We are getting above the 20, but still below the 50. So this is where we're still in this little rally phase. The if you look at the velocity never dipped lower. So it just telling me that there is more room for a dollar to run. And this also correspond with the bond yields. The way bond yields are acting, again, they did rally this week, and so did the U.S. dollar. So I think we have to really take a look at the correlation between the bond yields and the dollar. Based on the velocity, it's not telling us that, okay, it's ready to turn over yet. I think this rally can go a little bit higher, and until we get that reversal sign, we are in this upside correction phase. That's really where we are. So the trend score has gone from -3 to 0, so there's been improvement. And I think as we go into next week, we just really have to be taking a look at the U.S. dollar both ways, both the long and the short. That's exactly how the dollar has performed this week. Now, if we take a look at the yen, and I think that's another one, as we discussed, this whole rate cut expectation. Remember, the Bank of Japan is on the other side, where people are calling for the end of the easing policy. And as you can see that when the expectation falls, that they will be making changes or not, and that's really what's the yen is running on. So here we are, yen pulling back, and you can see how the velocity score was really weak. And again, this is a great example, as Rob said earlier. If you had a certain outlook, it just never triggered. It just never triggered because it never really breaks out. So at this point, we really have to scale back on that bullishness we had in the Japanese yen, because again, we're seeing the dollar performing well, and we notice that negative correlation between the dollar and the yen. So right now, yen is now back in the negative camp, both in the velocity and the trend score. So I'll be looking at more of the continuation next week. Now, there are certain currencies where we did not get any shift. One of the currency is the Swiss franc. Usually, we see some currencies run up during the holidays and then they do correct. That's not the case with the Swiss franc. And as much as it just doesn't make sense why Swiss franc is so strong, I've said that before. I think Swiss franc is running on its own. It's not following any sort of correlation or anything like that. So right now, it's still a +2 on the both trend of velocity score. So we're going to continue following that score. Now, with the euro, it's a totally different game. The euro is still performing weak. I mean, if I take a look at this chart, I know we were -2 and now we are -1. But if you just take a look at the range, this is still a low base. So what happens in a low base, or what happened in a sideways sort of price action? The moving averages start to flatline. It just go back and forth. So I think in this scenario, I'll be taking a look at mostly the top and the bottom in the range. Once we get at the top in the range, we have to see if that breaks out or retests and breaks lower. But this is still a sideways low base for me. Velocity is a little better, but that's why just telling you that there's no trade at this point, but something we'll have to look at next week. And British pound is another one that really surprised me because, again, one of those currencies that was doing really poorly. And you can see this week has been a nice little bounce. Now, the big question is this a bounce or short? Well, in the grand scheme of things, this is a bear rally, but at the same time, is there a sign for reversal? I am not seeing it right now. If this is going to fail, we will fail at that 50-day moving average, but the way we are closing out this week, velocity is not confirming that. So again, not a trade for me right now. It's just going back and forth. And now looking at the growth currencies, start with the CAD. Again, same thing. It kind of fits the same sort of scenario as the euro. This is going sideways. This is a long sideways period, and one of the reasons why we really haven't traded these Canadian pairs. So once they break out one way or the other, I will be first one to jump on, but I need a confirmation. You can see how we failed today on this little wick on the upside. So sideways on this Canadian dollar, we have to put it on the shelf till it really comes back alive. Now, taking a look at the other two currencies, the Aussie and the Kiwi, you can see Aussie was doing well during the holiday period, and so was the Kiwi. They are both pulling back, and they're pulling back right back into that trading range. So again, these are the currencies that I will consider range bound. They're not having good follow through, and that's really where we are. We are at the upper end of the range for Aussie and Kiwi. So we just really don't want to be going long when things are at the upper end of the range when they're not really that directional. So I really don't have a strong call on the Aussie. I think it's just going to move based on the market sentiment. As you can see, market sentiment this week was weak. So it's not a surprise that the Aussie did poorly. And if you jump into the Kiwi, Kiwi looks relatively better than the Aussie, I must say. I want to point that out, that relative strength of weakness. If this Kiwi can break out of the resistance, let's say the market bottoms out and the Kiwi start to break out, I would love to be long on that trade. But right now, I neither want to be long or short the Kiwi. So there's certain currencies that are moving and there's certain currencies not going anywhere. So yeah, the Kiwi is one of them. So we just really have to look at the Euro, CAD, Kiwi, put them to the side as not as a sideways currencies. And there are other currencies that are more directional. So we want to trade things that are directional and keep a close eye on things that are sideways and wait for this eventual breakout. Back to you, Rob.
Thanks, Ankit. And I want to point out, and I pointed this out on Wednesday, I want to point out this kind of candle movement. I mean, take a look at these candles. During the day, every time I had a run that fell apart, and every time I had a plummet that was bought. These are very, very difficult candles to trade because if you have stops, if you have fairly tight stops, trading something like this, longs and shorts get stopped out. Everything gets stopped out. So whenever I see these long wicks on trades or on charts, I get really freaked out, being like, hey, I do not want to trade this until it is very clear. Like I need something clear like back here. This is absolute garbage. This is absolute garbage to trade. And now when I see it, I get really paranoid. Like I don't want to even be close to the Kiwi because every time it looks like it's breaking out, it's failed. Every time it looks like it's breaking down, it rallies. I have no desire to get chopped up in a currency like that. So here we are on the trend score, and no surprise, pretty much everything in the middle. Everything in the middle. We do have two possibilities though, or one possibility. Yen is weak, Swiss franc is strong. When we had our payrolls class, one of our traders asked me to look at Swiss franc yen, and it looked great. It looked absolutely fantastic. We'll take a look at it here in just a second. What's moving right here, right now? Where's the momentum? Well, crypto's got a lot of momentum to the downside. We know that. The yen currently has a -2 on velocity. So again, that fits. Yes, we can look at this yen as a short early in the week. The Swiss franc, however, it's not showing a ton of strength yet. What's showing a lot of strength now? The pound. That pound move really surprised me. And it was, like I said, Anka said, the dollar looked weak, the euro looked weak, the pound looked weak. The pound just had this massive rally. I don't know if I can trust that pound because the trend score on the pound is at a 0. And I don't love to go long on things that have a trend score of 0. So for me, it's going to be a pretty boring week for me. Well, not week, but at the start of the week, there's only one trade I'm even interested. Swiss franc yen. Let's take a look at that. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? While I've got Bitcoin up, you know what? This is a decent looking trade. I mean, like I said, we've got this rising lower end of the line. We got this rising lower end. That looks like some really good support here. The big problem is I think if you buy it here, I think you might be sitting in it for a long time. I think what you want to do is you want to take a half position. If it breaks out above this 44,700, 44,800, that's going to be the area where maybe you want to take a half position because it might fail again and drop back down, but it should hold this support level. As long as it holds this support level, you can be long on it and be pretty comfortable. Once it breaks this lower trend line, the trade is over. You need to get out. That's going to be your signal. I don't know when it's going to break out. It looks like it's building to break out. I think you just have to be selective on when you take some positions. Quarter positions, third positions, half positions, those are all very, very acceptable to use when you're just waiting for something to break out. In Forex, Swiss franc yen, really the only thing I'm interested in. And we talked about this. We got a lot of resistance here, and you can see it failed at this resistance. That's not great. We want to see a breakout and run, not a breakout and fail. So this one here, I need to see this pull back or give me a more significant breakout. You can see in a 4-hour chart, it's still a high base, and we could easily high base for another couple hours or another couple days before we break out. But to me, Swiss franc yen, and let's talk numbers here, looks like 170.50 is probably about, 170, let's just get an actual number here. 170.80. 170.80 is going to be the point. A breakout above that, I'm in. I'm ready to go. Okay, what do you want to take a look at?
Hey, Rob. Well, like I'm in the same boat. There's not a whole lot of pairs that I have that looks the best technically. I want to point out the scenarios. Like, what if this turned out? What will I pick? I think if the dollar stays strong, I still like euro dollar. Euro dollar to the downside. We've seen how $1.10 has been a good resistance level. Each time it pokes higher, it just turns lower. And if this dollar has more room to run, which again, based on how I'm looking at the close today, the yields are still at the highs, and we can still see a continuation. If that's the case, I don't mind taking a look at your short, euro dollar, because again, pound is strong, the Swiss franc is strong, so this is the other option that I will look at. Again, it doesn't look the best technically, but if you look at these rallies to sell into, I don't mind that trade. I don't mind that trade at all. So that will be the one that I'll be paying close attention to early on. A lot of the other dollar pairs, are in these rally mode, like dollar CAD. If you want to take a look at it, dollar CAD is really interesting because dollar CAD really deviated from each other in the last month. You can see. So if this is supposed to rebalance, where CAD stays sideways, but the dollar started to rally, I don't mind looking at this trade as well, especially from a daily to 4-hour chart. This is a wide range that it moves in. We know that 132 is the bottom of the range. And as you can see that this is just reversing some of that big move from the last 2 weeks of December. So if this is kind of in this little basing pattern, if it breaks above that 132.80, I don't mind that risk to reward ratio on that trade. So again, it's all about following the momentum, and following that is more sustainable. There's more consistency in some of these movements that we can just continue going into next week. But again, this is still in the early part of this month, so I just wanted to highlight that this is where changes happen. So be diligent in all the trades that you're taking. As we are moving into the second week and the third week, we'll start to have a better idea where the markets want to go. So, but right now we're still in that transition period.
I agree with you, Ankit. There's just not a lot of good trades out there at the moment. At Maverick, we think, look, the market is like the ocean. And one of my favorite stories, one of our really good traders told me, he was a surfer. He lived in Hawaii. He was a surfer and a lawyer. And he's like, Rob, the market is just like surfing. I go out there every day, and some days the waves aren't any good, and I don't get a good ride. And I'm out there waiting for hours and hours, and then I finally get that one wave, and I ride it, and it's just awesome. And then there's some days where you get 5 or 6 waves that are just amazing. That's how the market is. And I love that story because, I can picture that in my mind. There's not every day you can't go to the ocean and get good waves. Some weeks, there's just not good waves. This is one of those weeks where, hey, maybe there's just not good waves this week. So as Maverick traders, we always want to trade less in these environments. Now, you remember just a couple of weeks ago, I said, hey, the waves are here. Let's go surfing. Let's trade more often. So there are going to be weeks where I say trade more, not less. This is one of the weeks where I say trade less, not more. Watch for that CPI report in the US. That could change some things. But look, keep your capital dry. It will get better at some point. This is just not a great market environment. So everyone have a great weekend and take care, everyone.